following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Thanks for joining us. Just want to mention initially, got a couple of new things in the carousel on the TFNN website. Would love for you guys to go by and check those out. A lot of new things pop up on the homepage, and I unfortunately don't alert you to those all the time, but I was just kind of perusing through the homepage and seeing some really cool things up there. We're discontinuing the free daily video, so that's something I used to do every day. I stopped doing it in lieu of the scanner kind of does some of the work for you, so we're just going to try to focus on that. And if you guys want a free daily video to still appear, just write TFNN and we'll try to put it up on here. We do a lot of custom videos on a day-to-day basis, actually, for some firms out there that follow our information. It's kind of nice being in Asia because I can do them in the afternoon instead of getting up at 3 in the morning in the U.S. and trying to get all these things out before the market opens. But let us know. Let me know, jlogan at tasprofessional.com. That's my direct email address. And by all means, send an email into TFNN about anything on your mind and anything that might benefit everybody else. Some requests are really universal. So we're going to first dive into something we talked about the other day and we've kind of been following. We're going to take a look at the Shanghai and the Hang Seng really, really quick because some of the stocks in the Shanghai and the Hang Seng today alone, between yesterday and today, are up 20 to 25%, if you can believe that. You ought to believe it. I'm just telling you it's the truth. But if you want to do some research, it's amazing. After Joey got on the show, we kind of popped our head up above some inflection points on the Shanghai. He talked about, might be great to buy this on a pullback, but if we kind of churn up here, you're going to have to chase this. And this has been a nice move. I'm talking the Hang Seng. We're talking about the Shanghai right now. We're looking at the Shanghai, but look at these numbers. I mean, this is nothing I concocted. This is actually real market action here. And when I go into the Hang Seng, let's see if that's not a real okay, here we go. He's flipping me out there. We talked about getting our head above water last week, and Joey talked about these things had kind of been in compression mode and we're going to pop. And that's exactly what happened, to say the least here. Here's the Hang Seng situation. This is a heck of a move. I'm going to say hell of a move and throw censorship out the window here. That's a move. Here's the 240s. Here we go. So, what do you do with these now? You don't short them. These Asian indices can just never look back sometimes. You don't know when that's going to happen. But there's, in my opinion, zero reasons to even get out of these right now, and also zero reasons to go short. That's quite amazing right there. That's the Hang Seng. And by the way, the number that I don't give out all the time either is 877-927-6648, 727-445-1044 for international phone calls. And tomorrow we're going to have John up in Philadelphia. I think you want to hear this. We're going to have one of my guys from one of the grain elevators on. We're going to talk about soybeans, wheat, and corn, obviously. We're going to talk a little bit about soy meal, and I think you'll find that interesting. A little bit of fundamental look towards the new crop. Things are kind of springtime, and let's just kind of see what the acreage situation is, forecasts, and possible demand. So let's take a look at the S&Ps. This has been, we talked yesterday. we had to kind of get back down below 2070, 2068, that general area. We did that. We closed below it, and now we're just kind of rattling around there. The Brett situation, hanging in there on the daily, slightly positive. It's not what you want to see on a breakout, by the way. So I told you I was not a huge fan of, buying this breakout. Was just going to kind of wait and see, pass on it if it continues to go higher, and just try to see if we can get back down into the fair auction. We've poked our head down. This is what stops are for. It's just kind of been a little bit of nerve-wracking experience for me. I've been playing around with that inflection point area. Those highs, 2073, 2074, a little bit rich for my blood. So I'm just kind of sitting tight and waiting to see if we can get another close below. That's the way I'm looking at the S&Ps, and I'm hoping that our breadth numbers can start showing a little bit early significance here when it comes to giving me a little bit of a guidance system. Let's take a look at Alcoa really quick. Going to have some news out on this. Talked about kind of getting out of our shorts the other day, and we kind of continue to power up a little bit here. 1327 is a big inflection point on this particular stock as we go into some earnings. Let's take a look at the NASDAQ really quick just to talk about some inflection points. And the reason I'm pulling this up is in the scanner, if you'll notice, you got a new kind of set of profile down here, or profile set down here. Here we go. Here's the inflection points to pay attention to. I really like how this is set up. I like shorting this a little bit better than shorting the S&Ps. 43.45 rounded off is the unfair high here. Kind of, had that yellow bar. This is a little bit bearish in my mind. Here we go. We kind of crossed below zero on the navigator a while back. 42.83 is going to be your targets down south on this trade with stops above 44.70. Let's see. I'm sorry. 43.45. Just to get some NASDAQ numbers. Those are the futures too, folks. Let's take a look at the DAX. We talked about, this thing kind of consolidating above profiles now, had the breakout. This is the situation on the DAX. As you can see, I want to blow this up a little bit. We expect the euro to head lower. A little bit of a default action. DAX might head higher. 12,078, still the big inflection point there. I'd love to see this thing churn a little bit here and get on its horse again, but that would also be helped in some ways as we look at the euro getting back down into 107.02 and even lower. Here's the weekly situation. Again, we had kind of hoped we had gotten into that DMZ. We did that. The DMZ being, going back to the daily, we hit this 2 days ago, highs of 110.36. Those inflection points are 110.52. And that really was the kind of the tip of the DMZ relative to that weekly unfair low also right there, as you can see. I'm showing these charts in the den. I hope you guys are seeing them on the website. But look at the way this is acting. I mean, I think we can easily get back down to that 107. That would possibly elevate the DAX by default a little bit there, and that's kind of what we're counting on. Talked about not shorting the yen. Did come off that inflection point. That's okay. That was a target-rich environment. We had talked about getting longs on, and 150, 200 basis points is not a bad move up. I'm not a big fan of shorting the yen, so this is kind of a pass on this and just kind of a wait and see. So we got to have a breakout, or we got to have a new profile appear. Got to have a new profile appear. Here's our weekly. I love how this thing is kind of compressing up here, and you got some fundamental things on your side on the long trade. Well, the devaluation of the yen, that is. Aussie dollar, we kind of looked at this the other day. We talked about the short trade on it, staying short with stops above that 76.90, I think it was 95, into the 76.93, into that 77.11, I think it was. Here, no, 70. Here we go. 77.19. So we've come up into that. We're in the DMZ. I like this as a short. I like stops above there based on your appetite for risk, and I still like this as a short. Why? This is why. Okay. We're going to kind of stay on currencies here because it's going to kind of predicate some of the other things we're going to talk about today. But talked about the Australian dollar. Here's the weekly, well above profiles. But let's talk about, kind of what we talked about the other day. We were down into this profile low. Here we go in the 124.52 area, rounded off, and we have breached that. So now you know that the shorts now possibly are going to have control of this for a little bit. It may be a while, maybe a couple of days, it may be a week, but 124.52 now is going to be that unfair low to pay attention to, and the target now on the downside could be, this is again a little bit dollar dependent, but could be down into the 120.59 area. All right, so a little bit of a decent range in there, but there's kind of air in between those daily unfair lows and that weekly unfair high. So there could be some violent movement here. And how do you trade that violent movement on a short-term basis? You just kind of got to look at this and pay attention to the shorter-term profiles, which are absolutely given in the currency section here in the scanner. As you can see, USD, CAD, here's your inflection points we just talked about. There's that 120.59 area. There's the 124.52 area. And if you look at this, we kind of started breaching ground 22 bars below our 240s right now. Okay, we talked about the DAX, and we talked about Shanghai and the Hang Seng, talked about the S&Ps a little bit. Let's take a look at the Nikkei just to throw the last Asian thing in here. And this was interesting to me as I was watching it today. 19,770 unfair highs. We've gotten above there too. Those were very coincidental. 19,770 on the daily unfair highs along with the weekly unfair highs. I like this action here. And believe it or not, I like this to go higher. This is the Nikkei futures June contract. And the good news is the stops can be oriented below that 19,770. I think you just sit tight. You got a dual time frame line up there. I'm going to go back into my scanner here and show you really quick Nikkei 19,770, 1970, greens across the board. And believe it or not, the Nikkei looking like it's possibly going to hold a breakout here. We're going to be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. About a 5-minute segment here, and then we're going to take a break, and we're going to get Edmundus on with us next to talk about some of the things going on in Europe. Here we go. Here's a dollar situation. Right in the middle of fair auction, we talked about, the possibility of this, the big leverage point down at 95.46, 47. We're kind of just moseying around above there. Here's a new profile that's appeared on the daily. We reached these targets yesterday up top. And now what do you do? Again, this inflection point is a little bit higher than the previous one, which is a little bit higher than the former weekly, which is higher than the current weekly. And what do you do? We're right, here in no man's land, basically, in my opinion. And you really, in my opinion, can't really do anything on an intermediate term basis until we have some kind of pullback. And I'm thinking that this is, something that we just have to wait, sit tight. I say that probably too much, but sit in front of the screen. I know it's difficult to do sometimes, but just maybe put some alerts in on the platform that you're looking at and wait for a breach of 97, and then you could start looking at that 97. In my opinion, as a little bit of a leverage point for this thing to kind of come down a little bit farther, namely down into that 95.5 area. So that's kind of the way I'm looking at the dollar, and how does gold react to that? Let's just find out. And here's the June contract. Talked yesterday about, waiting until we kind of came down into that 1208 area. We've come down into it, reached a low actually of about 1205. Gold's noisy. I'm giving it a little bit more room. I think that the dollar could come off a little bit more, and gold could, gain some benefits from that. That's kind of the way I'm looking at it. This is not a violent kind of get back into the fair auction and stay there type of move. It's kind of more of a consolidation deal, but you got to put your stops in. You got to know where to say uncle for your sake. And 1,200 is where I'm personally trying to let it rattle around into the worst case scenario on the long side with stops below there. That's just the way I'm looking at it. I'm kind of trying to hope that we get some benefit from the dollar coming down just a tad here. A couple other usual suspects we got to talk about before Eddie gets on. Here's the situation on the 10-year. So we do have a new profile appearing. We had that orange bar yesterday, all in the scanner, just kind of letting you know we're going to have some new inflection points. And we talked about not shorting this, but I've said that over and over and over again. Here's the long-term weekly. Not a lot of things to hang on to here with the 10-year either. So this is where we're at. Inflection points at 129.24. I'm sorry, lost my chart. Here we go. 129.24. And then you got some more maximum leverage down at 128.14. But I'm pretty much not doing anything until those inflection points are hit either way. Hope is a. I love. I forgot his name. It slipped me totally right now. Morgan Freeman in Shawshank Redemption. When he looked the guy in the eye after they'd been doing about 20 years together. Hope's a dangerous thing. It actually is a dangerous thing when it comes to trading. I'm using hope in a not a gotta have it happen way. I just say it'd be nice to have some help. That's the way I should have said it, Jay. What a great movie, though, in my opinion. Let's take a look at November beans really quick. This is something I've been relatively bearish on. I'm still bearish on. Still got the stops above 973, and hope we can get down to 942.5. But I'm just putting the stops in and trying not to look at this one. And that sometimes is the best way to trade. Stops in, walk away. And obviously, the OCO orders are a great way to trade if you've never used them. You can set your stops, set your targets. One cancels the other is the name of the game on OCO orders. And it basically allows you to not mitigate or change your position on the topic. I mean, you can obviously go in there and change it. There's no problem with that. But it kind of lets you set your risk reward scenario predefined. And, that's sometimes one of the best things in the world to do when it comes to trading is just set it and forget it. We're going to take a look at crude oil when we come back. We've had some movement in crude oil, and Eddie will be with us in just a bit, folks. Hang in there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we have Edmundas Katinas on with us. Eddie, you there?
I'm here, John. Good morning.
How are you today?
Seeing better days a little bit. It's raining, but, it's like one of the 20 days in a year that's raining where I live, but, I can handle. How about you guys?
I'm looking forward to you getting here so you can experience what's going on here right now. This place is exploding. You're going to not recognize it when you get here in a week and a half or so. Just new buildings going up everywhere, new restaurants, a lot of things for us to cover when you're here, obviously business-wise, but you're going to just be tickled when you see what's going on here. It feels energetic, so to speak.
Looking forward, John, to visit again of the place where I've been there, last 2 years, 2.5, but you just said lots of development went through in that Buckle City and little island of where our offices, main offices are. I'm not very happy of the urbanization of that. You might, but I'm not. I actually thrive for the, for untouched, like used to be, serenity of virginity of the surroundings and environment. It was very, very cool.
I'm with you. I mean, I'm just saying we got some. The big benefit, as you know, I like to eat a lot. So there's some cool restaurants here. There's some of the. Michael's sitting over here beside me, and we will both agree that some of the best Korean food I've ever had is sitting right here in this town, a couple of blocks away. Amazingly so. So I'm looking forward to going there at the very least. But there's a lot of cool little businesses that are popping up, and it's not getting sprawled out. It's kind of resurfacing itself, put it that way. It just seems like things are kind of getting shined up a little bit. But we'll head up to that couple of places when you get here, obviously head down to Sapali, hit the scuba diving, snorkeling scene, and go up to that one of those places. I was up in the mountains recently. We'll have to take some friends with us, of course, because me and you go up there alone.
Scuba diving is one thing, but John, as we said, I'm a big fan of the kite surfing. So if Michael can check the places to rent, because equipment, I cannot probably bring my equipment in. There should be some kind of kite surfing schools, we can rent equipment, or.
I think the keyword is. I think the keyword there is should. I don't know if there are any.
Okay.
But hey, let's take a look at what's on the screen here. This is something you're kind of almost married to. Some of the things that we've been doing lately. The ruble, USD, and cross, and we're looking at the weekly right now. What is the temperament of this? I know we crossed the border below 59.14 recently, and kind of went back and retested. But where's this thing headed?
I trading this currency as I do trade other currencies, as you know, not on weekly charts, John. I'm trading a ruble. It's a little bit slow. This chart a little bit slow, too volatile. Okay. It used to be okay since the breakout in September last year, but not now. We need to get out of the little chop and get faster chart, which is daily would be good.
I'm looking at it.
Okay, here we go. Yes, exactly what it is. And if you squeeze a chart, your viewers, you see how balances areas of supply and demand, projected areas of supply and demand, that regulate the trade. And if you squeeze a chart, you would see that we are approaching right now the levels 54 to 50. That's December of this year, daily charts, POC, historic POC boxes, supply demand areas. It's coming from December. You see the three of them. You need to squeeze a little bit more. Yes, exactly. Yeah, three of them. Okay. See that, John? 1, 2, and 3. One profile is the middle. Another profile. Yeah, that's a place.
Okay. Go ahead.
That's a place where we need probably to look to price close above and start trading back into the box, or best of course to go. I'm looking to go long this currency, short ruble and long dollar, but regulated down way. What I'm looking is one thing, but on the way down you can see clear pattern of the descent of the strength of the ruble and weakness of the dollar, and our boxes or our market profiles led this through the trade very nicely. We did not have a single trade, like not a single daily close above profile. So it was an easy trade. We were riding our portfolio, we've been riding this down since 69s. So we captured primarily all these 16 basic points, 16 handles moved down. We're looking at this point to long-term price to reverse. We're looking for the new box and go to the upside. Yes, that would be the trade.
Okay. Well, that's a valid way to look at this, and we appreciate the insight on it. Can we go right into crude oil?
Yes, go ahead. This is also on our property, on our portfolio.
Right. Yeah, we just, I know you've been watching the show. We've actually, it's kind of cool. I don't know if people out there really, have gotten, I don't know if I've even talked about this, but one of the things that Eddie and I do is, it's really difficult sometimes, and you guys probably know what I'm talking about. Like when you're in the heat of the battle and kind of down there swinging a sword and fighting the market, sometimes it's difficult to kind of step back and take an objective viewpoint and kind of stick with like a kind of a 30,000 foot view plan. And one of the things Eddie and I do is he's in there doing a lot of the executions, and I'm kind of giving more of a lot of times more of a non-involved objective viewpoint, and that's worked out extremely well to work in tandem like that. And we give the show. We have the same views. We kind of put our money where our mouth is on a lot of things that I talk about, actually. But Eddie's in there, kind of really optimizing the position, if you will, or the stance on it. And a lot of times Eddie, if you want to kind of go through we talked about the euro a couple of weeks ago, and kind of how that, massaging of that trade worked. What's a general if you don't mind, on crude oil right now, we've kind of gotten into some unfair highs on the weekly. We kind of had that breakout on the daily, but we're still kind of in a fair auction here. What's the stance that you might want to execute on to try to maximize some points here on crude oil in general?
I don't want to execute. We executed, John, for our portfolio, and you and I know that that number of 53.36. You mentioned that a couple of days ago, and I've been watching your show not just because I like to, but just because it saves our time, you and I, then comparing the notes where we actually are. Because as you said, we're managing portfolio together, and I just punching the buttons, and both of us making decisions based on it. So 53.36. I took the stand on the short side, 53.36, a little bit on the short side. It was a squeeze into the 53.90 yesterday, and but what we've done it, we used the deltas, reduce the risk. Since options are volatile, John, we chose June options, June expiration that expires on May 14, and I chose. Let me see which strike price out of the money. Deltas are 33%, and we bought it puts yesterday. We bought it June 90. Hold on, June. I'm just selecting. Want to be sure that
right.
I do have a. Yeah, we bought it 52 puts, John. We bought it 52 puts and 51 puts of the expiration of the June expiration. That expires May 15. That reduces the delta. I can see delta is 33, and if the market keeps going higher, you lose less, and less. If the market turns around and goes down, you will make more, and more, because price gets closer to our strike price, and of course delta will increase, and that's how we regulate this trade. And if price closes below or inside of the profile, weekly profile, as you said, or daily profile will appear, right? Because we're dealing this trade right now with the weekly profiles, 53.36 area. Then we kind of good, and we can increase our deltas, our exposure to the upside, to the downside, and then we probably will trade likely into the 48 area, which is a box on daily box, the area with breakout area, 48, 33 area. So that is target.
Okay, well that's kind of the risk temperament stance that the folks out there don't know this. We like to take. A lot of times we won't, we will, but a lot of times we won't take outright stances because there's just a huge benefit in putting some kind of option hedge or insurance plan around some of these things, or just going the options market alone, like Eddie's talking about with the puts there. So it's interesting how that is kind of, for both of us, really been something that's been meeting in the middle and deciding that that's a really good game plan over time, is to use options. So we look at the profiles, to sum it up, and we try to figure out what's based on volatility and other factors, and looking at skews, looking at graphs of scenarios. Like, there's a lot of cool programs out there now that you just put in your scenarios. I think Thinkorswim, I've never looked at Thinkorswim, but I've heard they've got a lot of guys that use TFNN, I believe, probably have a Thinkorswim account. They actually have a show on every week. I'm sure that quite a few people do, but to be able to put those scenarios in and kind of look and see how they will work out over time, and in certain scenarios going against you or in your favor. So it's one thing that we've kind of settled on. That's not a bad idea. All right, Eddie, where are these S&Ps going? It's been a little nerve-wracking.
I got clip, John. I got clip on S&Ps. I believe so much when it closed below the profiles and daily profiles, but that's that's name of the game. You got to take the hit, and I took the hit, and they closed below the 61. I've been very happy, and this is your daily profile, right? They closed inside of the box just recently, right, on those gray colors. So I traded inside of the box. I see no direction. That means not even a high point of control. If your viewers can see it, this profile does not has a center line. in there. That means entirely full and total unconviction between the market participants in this way. So I kind of played that, and I played those bounces, those gray colors into the recent price levels, into the 71s, and I got clipped. I made money, lots of money on the way down. And I added up a little bit, because that's when you make big money, when you're able, mentally to add up to the winner, not to the loser, to the winner. That's when you make killing.
I'm glad you said that. That was actually one of the things in a sense. I'm paraphrasing a little bit here, but John, the Paul Tudor Jones, one of the things that I think it was maybe even John that had posted some things that were statements. I believe he posted a couple of statements by a couple of people, but paraphrasing what you just said relative to what Paul Tudor Jones said is, pressing the gas pedal when you're right, adding to winning positions instead of adding to losing positions. That's so spot on what you just said. I mean, that's the mark of a
So I'm not a kind of long in the answer to your question. I'm not kind of long yet. I just covered neutralized delta. We were on long puts and other stuff. So I'm buying right now futures, E-minis, to neutralize my long puts, and we'll see. Nothing will happen until minutes comes out, right? So minutes comes out, and then the market going to be volatile, and that's where you got to get rid of your options, because options going to blow up in the premiums. And then dust settles, and then probably we have to get again into things. But now options are pumped up. Everybody's waiting for the minutes today, and that's what I probably will see where we are going, right? So everything, and dollar and markets and everything else.
Right. So I pulled up silver. I've got a support area around 1660. That's what we're looking at on our profiles on the May contract, and as we look at gold, we've already talked about that a little bit. You were probably watching the show. Gold, somewhat similar situation. Gold's gonna, to get back above 1208 is gonna be pretty powerful for that to kind of really step on the long gas pedal again. But silver, you've got a little bit of a support area down at 1660. Now, I think you just got to wait until that happens. That was a question from the Den, Eddie. If you have any comments on
I'll give you my I'll give my 2 cents on it. I noticed that you've been kind of apologetic of the guys are wait and see situation here. Markets are why the wait and see situation. I explained to your my view because the markets are balanced. Markets are balanced. It's clear piece of information to us as a traders that markets are in the balance. This does not mean that market is in directional or non-directional move. In sense, actually, markets are balanced 80% of their time. Only 20% time they move out of the balance, and then they balanced again. They sit into the neutral position. Oh, I hear music, John.
When we hear the music, we got to stop. So we're going to take a break, guys. And Eddie, if you can hang out with us, that'd be awesome. And we'll be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We've got Edmundus on from Spain with us today, and Eddie, I've got the XLF up right now. This has been this is the financial sector ETF. I've been quite bearish on this. Kind of came off that 24-28 area yesterday, combined with another inflection point that's a little bit higher. How do you like this setup? Have you been?
I love it, John. I asked you yesterday if we can include that in our portfolio, but we can't since it's equity, and we probably with the infusion of the more capitals in it, we will be able. Yeah, I love it. This is a short, screaming short actually. And we've been giving all the time. Every bounce into the profile from below prices below the profile, and every time prices bounces into the daily profile lows, that means former demand, current supply. That's that's a free gift. This is very low risk, high return probabilities of entering trades, unless price will close inside of the profile and either above of the point of control of the profile, because as you can see, asymmetric distribution of the values. What that means, that the highest trades occurred in that profile, it's very close to the lows of the profile. That means the demand. That makes it double strength, that area. So the players of this market probably, or or whoever will be traded, don't need to look on anything on the long side unless price closes above point of control of this profile on daily. Meantime, this is just an opportunity to sell rallies.
Gotcha. I tell you what, I'm looking forward to. I know you're coming through Hong Kong, and I know Benny's coming up from South Africa, and Joey's going to be there. I'm a little envious because if I'm not there, you guys are going to enjoy Joey's. I want to call it a yacht, and rolling around the Hong Kong Bay, Causeway Bay, all the waterways around there. That's just. You don't think that's a
he been bragging today in today's meeting all like consistently. I got my big boat. Yeah, we'll see. Yeah. Whatever the big boat is. Yeah, I guess the riding. Hey, where I live, the boats are like dime a dozen here, and probably I'm not, but I guess in the Bay of Hong Kong, that's kind of makes it special or something. Well, I hope so.
Tell you what, it's not cheap to have a boat there. I said that is, as you know, I think we stayed in a room about as big as a closet one time there for like $400. The real estate there and doing little things in Hong Kong are not cheap, but the food's very reasonable. Some of the best food you'll ever have is in Hong Kong, and the street food, you can walk around last time we were there and just pick up some of the most outstanding meals, like at some of the diviest looking little places. Just great food.
As you know, John, I live on the border with Spain and Portugal, right on the border. The river divides a river named Guadiana. So my house is probably the last southwest house in Spain, right on the river bank, where the river goes into the delta of the river. So I can see the other side of Portugal. In Portugal, since we start talking about food, there is same probably as there, because the people going, fishermen going to the sea, some restaurant owners, they go to the sea themselves, pick up some swordfishes, some tunas, and yes, I know the places there they cook not for the tourists, and like for the €8, John, you can get nicest steak made by Algarve, Portugal, tuna steak or swordfish steaks, all kinds of stuff made.
Well, let's continue this very soon.
Another music, hey John. So
hey, thanks for coming on today.
What about business?
Thanks for coming on today. We got to cut it, guys. We're going to get hit here, and we'll pick it back up again tomorrow. Thanks, Eddie.
You're welcome. You're welcome.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.